In one sentence, why is the Global Competitiveness Report, or GCR, relevant?
The GCR provides a sense of why it is that some countries have been better at providing high and rising living standards to their citizens than others.
What do you take into account in measuring competitiveness, and briefly, how do you do it?
Well, we very much equate competitiveness with productivity because it's productivity that sets the sustainable level of prosperity that can be earned by a country. And so we're looking at many different factors that are drivers of productivity. And these range from the more basic to the more complex. So we're looking at things like macroeconomic stability, the quality of infrastructure in the economy, education, the functioning of markets and how well they allocate resources, and all the way up to the more complex things like business sophistication, the sophistication of businesses, and real innovative potential. And so basically what we take into account is the fact that countries, given their particular stage of development, will need to focus on different things. So for a country like Bangladesh, it will still get a big sort of kick in its productivity and competitiveness from improving its infrastructure, whereas a country like Germany can't forget about the more basic things, but also has to be focusing on innovation.
What changes have there been at the top of the ranking this year?
Well, one interesting change that I think will attract attention is the fact that the United States has continued its decline that started last year when it was overtaken by Switzerland, and this year has fallen two more places to fourth position overall. And this basically can be traced to the fact that it continues to have these sort of macroeconomic imbalances, and there has been a clear decline also in measures of its public and private institutions related to quality of governance indicators, and also continuing concerns with regard to financial markets in the country. A counterpart to that is that we're seeing that Sweden goes up by two places to second position. Sweden has many strengths, including its excellent institutional environment, very transparent governance, low corruption, and so on and so forth. And in addition to all these things, and also focus on education, highly innovative. Also, one of the reasons that it has improved is because its macroeconomic environment is actually looking a bit better, contrary to many of the other industrialized countries. In terms of other sort of rises in the rankings in the top 10, we see that Germany goes up actually by a couple places and is now at fifth position after clearly some improvements, particularly in governance indicators and things of that nature. And interestingly, Japan also goes up by two places to sixth position, still really one of the world's innovation powerhouses, but doesn't really improve, actually has a stable performance, but its areas of traditional weakness, such as concerns in the macroeconomic environment, high debt levels, and so on and so forth, have remained the same, whereas this has become a problem for other countries, and therefore Japan is looking a bit better.
And China tops the BRIC countries. What are the reasons for that?
Yeah, it's true. China actually has continued to rise in the ranking. It's gone up by two additional places this year to 27th position overall, while the other BRICS pretty much remain stable. So it is the highest ranked, and also that gap is growing. And basically China continues to have similar strengths to the others, such as its large market size that allows for enormous economies of scale, but a number of other strengths, such as relatively good functioning markets, and also quite innovative companies, particularly given the country's stage of development.
And briefly, what other significant moves have there been in the rankings?
Well, we've seen some interesting moves up and down. In terms of moves down in the ranking, we've seen some European countries such as Iceland and Greece have been falling in the rankings, and this is basically related to weakening in their financial markets and also their macroeconomic environments, and that's perhaps something that's not surprising. Similarly, in Africa, we saw a big decline in Nigeria, and this can be traced to weakening across most areas, and most particularly quality of governance and institutions, as well as, again, the macroeconomic environment, which has hit the country quite hard. In Asia, we've seen quite a few countries moving up in the ranking, countries like Sri Lanka, Vietnam, Indonesia, showing that basically, they're putting into place some of the factors that are necessary for continuing their strong and impressive growth. going forward. And I might just also mention the Gulf countries that have continued to rise in the rankings, almost all of the Gulf countries, in fact. And this seems to be linked to the fact that they've been making significant investment of their oil revenues into the productive aspects of their economy, adopting new technologies, and this is paying off in terms of their competitiveness.
And how is the report used by governments and other stakeholders?
Well, clearly the ranking attracts a lot of attention each year, and we know that it focuses, the press and governments on what's happening. But then, really, what's very useful is the details. What's behind the different pillars of competitiveness. Because truly the Global Competitiveness Report is the most comprehensive report of its kind in terms of the breadth of issues covered as well as the number of countries that we cover. This year, a record number of 139 economies, in fact, that are covered. And so we see that, it does provide a useful tool for countries, governments, businesses in, sort of doing a deep dive into what are the strengths and weaknesses driving their country's economic performance, and provides a sense of where to sort of look in order to see where the improvements could be going forward.
And finally, why is it important to think about competitiveness in the current economic climate?
Well, there's been a lot of uncertainty about the global economy in recent years. And clearly, there's been a lot of focus on the short term, a lot of discussion about stimulus packages, and really just a focus on how to make sure that we try to stay out of the worst possible recession that could be imagined. And so what's very useful about the Global Competitiveness Report is it takes a longer term view, and it allows us to think beyond the business cycle, as difficult as this particular downturn has been, and think about those things sort of beyond dealing with the recession that need to be done in terms of longer term investment in human resources, in infrastructure, and so on and so forth, that will really be important for driving productivity and prosperity in the longer term.